I'd like to bring in our first guest, shift gears a little bit, and move from the indices on over to the energies. We've got David Williams. He's an investor. He's a forecaster at Page Trader. David, it's good to have you with us, as always. And to begin the week ahead, a very busy week ahead. Now, in terms of, obviously, you want to talk technicals. I want to get into the levels that you're dialed in on. But first, the fundamentals. OPEC this week, a lot of focus on the meeting. Wednesday, you've got inventories. We're hanging out at multi-year lows in terms of stockpiles. You've got the jobs report, but again, for energy trades, it seems like it's going to be OPEC.
Yeah, good morning, Ben, and welcome to August. It's great to be on the program. As you know, we have this week's upcoming OPEC meeting, and there are those who doubt that this meeting will result in the hoped-for boost in supply for the United States. And front month Brent futures are selling at they were selling at an increasing premium to later months, which indicates a tight current supply. Okay. And as you mentioned, additionally, we have seen some recent weakness in the dollar, and a weaker dollar makes oil cheaper for buyers in other currencies. And on the other side of this, we have the weaker than expected manufacturing data from China, which is weighing on the demand outlook. So technically, to get away from the fundamentals, we believe that monthly closes above best case $96 in crude oil, and worst case, $88, keep crude in a position for a fourth quarter or slightly later retest of the $118 level. That may seem hard to believe at this point, but that is our forecast. And shorter term, daily closes above 96 are sort of pristine for the market. We don't know if we're expecting that today or not, but I do want to really stress that our longer term forecast is in the fourth quarter for us to be retesting $118 if we're closing above the $88 level.
Okay, not necessarily what our viewers want to hear in terms of prices at the pump. And I did notice, just to that point, they're right now, AAA national average is at $4.21 a gallon, down from 44 a month ago, but still up. We're talking $1.04 from a year ago at 317. David, I like the point there in terms of it seems like right away you kind of went into some of the data. We mentioned at the top of the show, Germany's disappointing retail sales, disappointing manufacturing data. We've seen that here in the U.S. You mentioned China. That sort of speaks to the global aspect. If you're talking about commodities, it's not just here in the U.S.
No, and China, I believe, is the biggest importer of crude oil. If anything goes wrong with China, it definitely puts some cold water on the pricing. So it's going to be very interesting to see how the market today, and especially this week, interprets not only the OPEC meeting, but the details and the further updates that we get from China.
You know, David, I heard an interesting conversation over the weekend. They were talking about shale production here in the U.S. and how we've seen a reduction thereof. But at one point at the peak, you know, we were world leaders in many ways. And ultimately, you know, the cost thereof in terms of these shale producers and the impact that it had on their bottom line is it was a loss across the board for the most part. But the idea being, hey, throw a ton of money at this in the beginning and it'll pay off later on. But now that we've seen some of those production decreases, talk to me in terms of crude hanging out around this $90 level. I for some reason was dialed more on the upside potential, that 118 level that you mentioned. Can you remind us again, if we see some price decay here, what are you looking at again to the downside?
Yeah, so we have to see monthly closes in our work above $88. We haven't even touched $88 yet, but we have to see monthly closes above $88 in order for our forecast for the fourth quarter to be back up at 118. Okay. And so if we're closing monthly below $88, that could change our outlook. You know, it's always a good idea to know what would make you wrong. Yeah. And I think for us, what would make us wrong is if we start getting monthly closes or a monthly close below $88.
Noted. Okay, and that $90 level is kind of a lower extreme of this range that we've been in. I like that because we say don't necessarily look at one area. It's not a line in the sand. It's kind of more that fat cran sort of range in that zone or that area. So $88, the $90 level, we can see we're hanging out around 95 right now.